Oh, yeah.
What's up, guys? Crypto Noah. I got my main man, Float Locker. We got Chris, some Know It Owls coaches here. We're just going to make a video and talk about, some of our current strategies that we're doing in the current market. People aren't as excited right now. The market's kind of been dropping, but the ETH ETF is going to start trading here pretty soon. I don't think it's priced in, and I think it's going to catch a lot of people by surprise. So we're just going to make this video kind of talk about some of our strategies, what we're doing to take advantage while we wait, and how we're preparing. John, what you doing in these markets, man?
Not much, man. Like just getting positioned. I am positioned. I got some LPs running, as those that follow me, running the majority of my strategy is on Ethereum USDC, just generating yields there. I lent out some spot ETH, borrowed against it. I'm running a strategy with Arbitrum USDC on Beefy Finance, and just running a meme coin strategy with Brett versus ETH on base,
On
which
uniswap?
is currently not producing too much yield, but it's kind of a wide range anyways. But just letting that run and just doing little tune-ups here and there when I need to adjust. But other than that, I'm not forcing anything. No, that's pretty much what I'm doing.
Okay. Have you changed any of your strategies like after you heard about the ETF getting approved? Because I changed I made a little minor tweak. I just wanted to see if you guys are doing anything different.
I'm getting more aggressively long Ethereum.
Okay.
My ETH position, I lent out spot ETH, so that way I stay long ETH and then continue to farm liquidity pools, just waiting for that eventual move. And I could just sit in it and just gather those yields in the meantime.
With all of my liquidity pools that I'm in right now, I'm taking my rewards and I'm only buying ETH instead of getting into altcoins, because I feel like ETH is going to drag the market up, and I'll be able to take some profits on ETH and then use those profits to get into some altcoins, some RWAs, like we were just talking about. I like Axelar right now. I like Arbitrum. I like Kindle Finance. It's been dipping, even though their website got hacked, or their domain.
Oh, yeah.
The domain. Yeah, the domain got hacked. So I remember Warren Buffett was talking about, like, he looks for opportunities to buy dips when something fundamental happens with the business that isn't like existential. And I feel like this is something that really scares people, but it's not really a big deal in the grand scheme of things. Nothing they can't fix. It's not like they got hacked or like any of the smart contracts were faulty. But yeah, and in addition to you, I'm on Radiant Capital. I'm going to, supply some ETH as collateral, borrow against some of my ETH, and then use that to borrow more ETH, so I can be a little bit more aggressively long ETH as well, while still having some stable coins on there, so that just in case things drop, I don't get liquidated. But yeah, man, an ETH ETF, a spot ETH ETF can only launch for the first time once. I definitely don't think the market's priced it in, and I don't think people know how much ETH is about to get bought up. And then when you factor in, like, once this starts to happen, I think activity on Ethereum is going to start picking up as well, which is going to lead to more Ethereum being burned. So I think from a supply shock standpoint, ETH is going to be a really good trade, a really good trade. So yeah, that's kind of what I'm doing. Chris, what are you looking at, man?
So even before the ETF got approved, I was already in anything I was yield farming. I was just buying more ETH. I just like, if I want an asset that has, I call it risk on assets, I'm like, I'd want to have Bitcoin or ETH, and I just like ETH more. So now that the ETF is approved, I'm also doing the same thing where I have ETH as collateral, and I'm borrowing on that ETH, entering it into positions. I think I'm a little bit more, maybe not more aggressive. I'm just choosing a different strategy because I'm using like tools like Arcadia, and Patch 10 is another thing they launched to take leverage positions where they provide the USDC and I provide the ETH that I'm already borrowing on. For almost all of my positions, I'm going long. I'm like in a leverage long position, and you'd have minimum IL loss because if the price of ETH goes down, you get more ETH. Awesome. Price of ETH goes up, you're already starting to compound that more ETH. So it's basically buying more ETH. That's what I'm doing right now for most of it, setting up. And like I said before we were on the call, I don't like that much stuff to buy right now, even though it's lower. I still feel like it should be lower than it is right now. But that's my opinion. But yeah, so just buying a ton of ETH.
Yeah, same. Yeah, ETH it's just such an easy trade right now. I feel like.
Yeah, and even if you don't do what we're doing, where you're adding a ton to your stack, or like trying to add a lot to your stack, just running like the basis trade on perps right now with using ETH as collateral and you earn 20% or whatever in dollars is awesome for something that you probably want to hold anyways. And you can do what you want with it. There's tons of ways to use ETH right now that are putting it to work. So
100%.
I just want to note that, when I left to travel in April, that's when the market dumped. But now I'm back. So I'm bringing the bull with me, man.
Hey, I hope so, man. To be honest, man, we were supposed to have the ETF start trading like before the 4th and then right after. So I don't, last time I checked, there isn't a hard date yet, but I'm hoping things get pushed out like as far as possible. There's still a lot of people that don't know jack shit about crypto. People don't realize that you can't afford to not take the risk. It's more risky to not do it. Like you got Larry Fink going around trying to advocate for the Merrill Lynch's, the Goldman Sachs, the Morgan Stanley's to have at least 3% of their portfolio in crypto. So it's getting to the point where it's considered financially irresponsible to not have at least some Bitcoin, pretty soon some ETH as well, as a part of your portfolio. So it's just like, and then you got the great wealth transfer and all these ETFs. Like it's really less risky to not do it. So people will find that out here soon enough.
And with the ETF, it just legitimizes everything, or just Bitcoin and Ethereum, right? It makes it legit.
do you guys? So ETH is going to happen most likely this year, and the people that don't understand it, great. Unfortunate, we'll make some more money. Awesome. The one I'm more intrigued about now, which I didn't think had a high probability, is the Solana ETF getting BlackRock and putting down an ETF application. That's where I'm like, I don't know enough. I know a lot less about the ecosystem than I do anything EVM and Ethereum. And I'm like, am I missing something over there? Is what I think about a lot. Because I'm starting to build a position in Sol, but I don't know what the market. I haven't done enough thinking around like what the market will do when Sol comes, because that means that you don't have to have the prerequisite of perp futures, commodity stuff, but like they have for ETH and BTC prior, and it opens the floodgates to having more ETFs. Like, what does that do if that does happen? That's like a very best case scenario situation, but I'm very curious if you guys have any thoughts on that.
I mean, I keep a pulse on these types of updates and what people talk about and the big institutions. I try to avoid having too much of an opinion to get me leaned or too excited in one side, right? So I just base all my investment decisions on the trends in the market. I look at the chart, see if it's a good opportunity to buy, and that's how I place my investment. But I don't know, man. I think it's kind of like if I had to give an opinion on a Solana ETF, obviously there's a greater chance that it could get denied, and I think rightfully so. I think it's moving too quick, too fast, right? But I would definitely welcome an approval because I'm farming some heavy Solana ratioed LPs right now, and I would love to see over 200 right now. I'm actually running some Solana LPs on Radium that are producing over 100% APRs, and my range on one of them is 125 to over 300 in Solana price, and it's still producing that much. And reason why I run them that tight is because you have to manage them manually, right? And I just don't want to do it. If I'm waiting for Aperture they're working on supporting Radium. Once they do, I'll run them tighter and run more tighter strategies. But I want that exposure, man. So, looking at Solana versus Bitcoin, it actually has been outperforming Bitcoin recently during its drawdown. There are definitely buyers in Solana, so that's something to consider. And they're accumulating, whoever it is.
And this is Chris. This is a spot ETF for Solana. Do you know?
I'm pretty sure BlackRock put out a spot ETF application, or like I don't know what the right form is, but like they put out a notice that they're going to put out an application for it. I might be off, but I was told that yesterday by like a news thing. So, yeah.
I'm not a big Solana bull, just because I'm not bullish on the technology long term. But the more I study the internet, the more I'm like, TCP/IP wasn't the optimal technology, but it still won out. Linux is actually better than TCP/IP, but it's what all of the banks and all of the large companies adopted. So we're on TCP/IP, and that's what it is. So it's probably going to be that same thing for ETH. ETH isn't the best technology when it comes to a layer one, in my opinion.
No, you gotta go more left curve, man. You gotta think more left curve on this, because if you overthink it, you're gonna be like, man, I don't understand why Solana would be in the top 3, right? But if you go more left curving it right now, it doesn't make sense to me either. Yeah, you gotta tap into the degen, the inner degen.
Like
and that's it.
I was gonna say for Solana specifically, I would really look into the meme coin culture, not because you need to get invested in meme coins, but just how many people have interacted with Solana over the past 6 months due to meme coins or due to not we'll say NFTs too. And it starts to be a very large number. And it doesn't make sense to me. It's not a tech thing. It's I don't know. It's what the people have decided. And only reason I paid attention to it is because of the going to the community events and everyone saying, oh, I first started doing crypto on Solana. Oh, I have a meme coin on Solana. And they have never touched MetaMask. They've never touched anything like a ledger. And they're like, oh, I have a Phantom wallet. And that's it. So that's
my onboarded. I'd say it's responsible for this bull run, right? It's onboarded a ton of people that wouldn't normally, just go in and buy Bitcoin, because now Bitcoin's kind of boring to them. They're like 2x, 3x. I mean, it's not enough, right? And especially a lot of new people to crypto, they're not coming in with a lot of money, right? They want to just test it out. They'll come in with $1,000, maybe 10,000, right? But I'm betting on $1,000 or even lower. And they're looking for that 100x, and they see the Solana ecosystem just when it was booming a few months ago. That's what they're interested in. And I think that's my base thesis on Solana, right? I'm not even looking at the tech. Tech can change in an instant, right? They could make a U-turn. Because they're going to be implementing, what is it, like a 2-node system, right? Operating system. There's going to be 2 operating systems running. This is kind of like a redundant system to allow the network to keep going, to make it more robust, just to handle the traffic, right? So that could only make it better, right? I like that idea, but as long as we can keep that base foundation of the degens that can onboard people that are like, you know what, let me try this out. Let me just gamble on some meme coin.
It's gambling. It's a casino.
It's definitely a casino, man.
Let me share my screen and then give another perspective. But I agree with you guys. At the end of the day, wherever the community goes, history has shown that it's not always the superior technology that wins. So if we go to DeFi Llama, you can see that Solana is number 4 in terms of TVL. And if we click on it, we can see that the TVL has been rising with DeFi as a whole. We haven't seen too many new protocols being built on Solana. A lot of new meme coins being built, but not a lot of new protocols. It would be nice to see some new protocols being built, because I like to look at developer activity. Usually we're and this is the same thing with TCP/IP. People started building on top of it. People are building on ETH. Right now, it's meme coin season on Solana. I do think a lot of that is going to transfer over to Base as we get deeper into the bull market. But I would have a more bullish case for Solana if more developers chose to build on it, because they're going to build what people use. And then in terms of an actual ETF getting approved, I don't know the likelihood of it getting approved. I haven't delved that deep into it. But just from a tokenomic supply and demand standpoint, they have a fully diluted valuation of 80 billion. The market cap is 64 billion and some change. So most of the top tokens are already on the market. And if we look at the inflation schedule, the tokens that are still coming onto the market are from staking rewards, like secure in the network. Most of the other ones looks like it's just linear vesting. So that could be really good, because when you have a spot ETF, Chris, I think you said it was going to be a spot ETF, they're going to have to buy up a lot of Solana tokens just so they can be able to fill orders. So that could be really, really good for Solana. If an ETF does get approved, I can see it hitting over 200 easy. Probably even over 3 if we have an ETF. It will be the first meme coin, or not first meme coin, the first altcoin other than ETH. ETH is kind of not even looked at as an altcoin anymore. If Solana gets approved as an ETF, I feel like that similar kind of aura could start forming around them. And they do have a strong community. I live out here in San Francisco. I go to a lot of Solana parties. They're doing the Solana phone, they're doing a lot of cool things. ETF would just make it more verified. And I think that would even increase developer activity as well. And so it could work out. but I'm still not buying any.
It's okay, man. It's okay. You know, as I said, stuff's overpriced. Solana's not overpriced, but it's at a good price. But it's still, there's a huge overhang because there's like, outside of the ETF, they have all the people who bought from FTX bankruptcy auction. So they bought it like, I don't know, 80%, probably like $50 on average if you were in the actual auction. And then they have the huge unlocks for staked Solana that's coming up from investors too, at a much lower valuation. They're going to have a ton of sell pressure at some point. So like in the billions of dollars. So there's stuff happening outside of the ETF that makes it look not like a good buy also right now. But who knows? Who knows? It's just something I've been speculating on, like macro things, because it's the only thing interesting on a large macro scale, because it has an implementation of like government changing how they think about crypto if they say yes to the Solana ETF. But yeah, otherwise there's other stuff. There's many more things you can be doing in the space than speculating on Solana.
A lot of people fuck with Solana, man. Point blank, people love Solana. It's meme coins have been the biggest on ramp to crypto lately, and Solana's been leading the charge there. So I can't take nothing away from them. But yeah, only time will tell, man. I'm really gung ho focused on like real world assets and layer 2s as a narrative. Also ZKPs, but not as much. But
I don't know. I don't have a deep opinion about ZKPs, but I don't feel like the market cares. At least right now, they don't care about it.
The market, I feel like the market doesn't care, but companies and like big institutions that want to go on chain, they care. And then I feel like the market will care as a result, because it's just like, when you look at any company, their biggest liability is their company and customer data. And for a company to want to come on chain and do transactions, they're not going to want their competitors or customers, like a bank. They're not going to want to know what they're buying, where they're sending money to and from. And the only thing that'll kind of help circumvent that is like the zero knowledge proof technology. I don't think the market has figured that out yet, because it's really an esoteric thing, and crypto is already esoteric enough in and of itself. But I think once that gets figured out, I think Polygon will do really well off of that. There's ZK EVM. I like it. I like the technology. But yeah, layer 2s and RWAs is what I'm like really focused on. I think RWAs are going to fly. I think they're going to fly.
No, I've been focused mainly on layer 2s and then dexes, like just what dex will win. Like that's really all I'm caring about. And so I'm looking at all the volume bid. I'm looking at all the dominance, because it's actually changing now for the first time. Uniswap is being challenged. It's by Aerodrome and Velodrome and stuff. But like, I wanted to know is other ones, because on some of the L2s, like I think Niles, Ramses, Camelot's doing pretty good too now, but they're Uniswap 40. So like, what wins out for like selling the shovels and picks? So how do you move money from point A to point B, or like switch money? What exchange wins? So that's a lot of stuff I've looked at.
Yeah. What layer 2s do you like other than Arbitrum and Optimism? I like the Blast layer 2, but Blast doesn't have a token.
I haven't used Blast. I've been, some friends are trying to get me hyped about Barachain. It's going to be very, very overvalued. Probably at the
bear, like a bear.
Like bear, yeah, like Barachain, like BAR.
I haven't heard about that.
They haven't launched. They haven't launched their mainnet. They launched their own testnet right now. But they raised a ton of money already. I like Mode, and I think there's some like, I don't know, ICO at level hoorah stuff that's going to launch, and it might work. Like there's one that's a bank chain basically. There's another one. There's the build on Bitcoin. So build on Bitcoin on Optimism. Oh, right. There's another one that's also Bitcoin, and I like that they're trying things now. But like Mode is probably the only one I find uniquely interesting, and I have some of that. It was a good price, and it's fun to farm. Like they have good farming rewards right now. And then I've been playing around, like I think I told you guys, with Pendle, doing some small amounts, but with points farming on Pendle. So I'm usually providing liquidity on Pendle for some of the LSTs, as well as some of I did like an ASIS trade for ENA, 60% sitting in the liquidity pool for that, and you just shorted the other side. And that's really cool, just to get a position. It's something I think will be here for a long time. I think, if the tokens are not great, token economics not great, but it's very similar to MakerDAO to me, of something that's going to be sustainable in the space for a long time. So I guess it'd be a version of
what do you guys?
assets. Like that.
What do you guys think about the ZK Sync? ZK Sync. I think they could do well this cycle. I still haven't claimed my airdrop. I haven't figured out how to do it. I haven't looked into it either. But
You gotta go to Mexico.
Yeah. I just have to figure out. I got to hop in their Discord and find like the website, because you can't just go on their website and claim it. But their fully diluted valuation is 3.3 billion. The market cap is 580 million. So it's a lot of tokens that still have to get dumped on there. I haven't like dove deep into the tokenomics yet because I haven't like claimed my airdrop. But I've noticed the yields on ZK Sync aren't like the best right now. Did you guys get the airdrop?
No, I didn't get the airdrop.
No, I did not either.
I'm surprised, John. You didn't get it?
No, I didn't. Yeah, I checked. I was hoping, but I didn't get it.
Yeah,
I did jump on some of the stuff that Chris was talking about. The Bitcoin, what build on Bitcoin. I jumped on that early.
Oh, nice.
I haven't really checked it lately though. I need to check it.
Yeah.
I jumped on Puff with over on Mantle. The other one you mentioned, Bear Chain. I jumped on that. So I did some Mantle stuff that build on Bitcoin, Puff, and just like some other things that I am okay just holding if it doesn't pan out this cycle, or if it just goes to zero.
Yeah.
It's more like taking some profits and spreading it around, right? And then just letting it be and not focusing too much on it. But although I need to check on those and see, there might be some things I need to do, claim, or
that's the tough part when you just leave it be. Like you might have to claim, they might switch the shit up. Like it's annoying for some.
Yeah, and you lose it, right? You lose the claim, and that's the tough part. So that's the, but yeah, other than that, yeah, just kind of the ZK Sync. I didn't get it, man. I was hoping I would get that, but I didn't really do.
It wasn't too lucrative, but maybe it's because I didn't. Like, bro, I literally took like a couple $100 and I LP'd for like an ETH USDC pool, not even concentrated liquidity on ZK Sync on like Sync Swap, and I forget the other decks, and I got like $1,000 on both my wallets. Like the Layer 0 airdrop, I got like 7K.
Oh, you got the airdrop for Layer 0? Nice.
Yeah, I ended up doing that. And my Layer 0 liquidity pool, I'm getting like 2% a day on it for like the past couple of weeks.
How tight are you on that? How tight are you on that?
I'm pretty sure I'm on base.
Okay. Oh wow. Okay.
This is my range right here. At first I had it from like here to here, but it went out of. And to be honest, so my range is 30%. So yeah, from top to bottom, I'm 30%. And the reason why normally I don't go that tight, but for this one, I'm willing to be a little risky because I got the money for free, and I really, you know what I mean. I'm already playing with house money, and I really want to. Like accumulate, like get as much rewards as I can, because like I said, I'm using these rewards to buy all ETH. And if I go over to revert just to look at the position real quick, when I first hopped in this pool, it was like 3,000% APR because a ton of people were selling them, and then it went down to like 1,000 for like a week, and then like this past week it's been between like 450 to like 800 and something. I just rebalanced this one 6 days ago, so about a week.
Yeah.
And I got like $300 in fees, so not too bad.
Yeah, I've actually been in I put 1,000 in 3 different pools on Beefy in the 0 USDC, 0 USDT, and then 0 ETH. Like I just put 1,000 in each of them. And then I was trying out a shorting strategy. It doesn't work the same for USD3, but it's close enough. So where you basically, for the USDC, 0 USDC, 0 USDT, you take however much you the Layer 0 tokens you started with, and you short that amount on like a perpetual exchange, and you just then get to have the fees earned. And it's interesting because my range is a little bit bigger than yours, but it's still producing like, I don't know, I think it's 8 days. It's been like 300 or 400. I think it might be off my amount, but it's a lot over the.
That's because you're auto compounding.
I'm auto compounding. That's the only annoying part about it, where I'm like, I want a version of that, because like I know how to do that strategy now very well. Like I'm good at managing that, and I wanted something where I don't have to compound it. But that is because it's reducing the yield.
Yeah, I never compound. I always use my rewards to buy things, because eventually I'm expecting my position to go out of range, and I won't get to benefit from the price growth.
The only nice thing about Beefy is you're not going to ever go out of range. So if things go up, you're awesome. If things go down, you're hedged by the short. if things go up a lot, that's when you have an issue with your short position. It's like
it's a hedged position.
Yeah.
Oh, that's cool, man.
Yeah. So it's been doing really well, and like some of the rewards are in like arbitrum token on one of them, and so you just get, they don't compound those because they don't want to sell it. But it's just it's very cool to see you found that, and like you're just in that in a much better way because you're looking at charts, and I'm like not a chart guy, so I'm just like math. I'm like, well, how do I make it so I don't lose money on the trade?
Yep. I'm on arbitrum. I'm on arbitrum, by the way, for the layer 0, not base. I can see why you say that. Ooh.
Yeah.
I was like, wait, did I fuck up somewhere?
No, but I'm on base. No, I'm on one of my positions is on base, and it's probably the least producing one.
No, exactly.
Yeah. So, but on optimism and then on arbitrum, there's like good yields. Base is the worst though. Base is by far the worst. But yeah.
Yeah. Other than that, man, I guess we just gotta wait for things to pop off. Summertime, so a lot of people traveling.
Do you even do anything when things pop off? Like, do we even like? You're not gonna. We're positioning for ETH, we're positioning for BTC, probably maybe a little SOL, and then like your stuff already bought, so it's gonna pop off. So it's like, what do you change when it pops off? Like that's the thing.
Yeah, at that point, I'm gonna be taking profits. I'm going to keep 70% of my profits in USDC. Look for like stablecoin farming. Try to like mentally prepare myself to get ready to short, even though I won't want to. The DGen in me. But I have like positions that I'm super convicted on that I'm in. And I have other positions that I'm like, okay, after this pumps, I want to look into XYZ tokens to kind of like start cycling profits. But I'm always going to keep like 70% in USDC because the market could fall out at any time because the macroeconomic climate is just too many factors that it kind of scares me. But yeah, I'm waiting. I want to start cycle trading, essentially, is what I'll be doing. But always taking profits. Always taking profits.
Yeah, for me, I tend to stay exposed to the market as long as the macro trend is up, and I follow the weekly, monthly trend, and as long as the weekly is at least in an uptrend, I stay long the market, right? I stay allocated, because I'll ride it. If I try to time the thing is, you try to time the top, it could run another 2x, 3x, right, without you, as opposed to saying, okay, we are clearly invalidating this trend. This trend is broken. Now I can get cautious. I would rather lose 20%, 30% from the top, or even 30%, 40% from the top and wait for that invalidation, right, to adjust my strategy. So, and those events take time to play out, especially on a weekly time frame. So I'm not worried. We have the weekly trend looks great. It's actually still kind of overheated in a way. It needs consolidation, and this is actually really good this time of the market. Really good for those that are sidelined, looking to jump in and start buying. Start buying, looking to allocate more capital, get a bigger position if they need to. But as far as what I've been experimenting with, I don't know if you guys heard about or worked with or tried out the Beefy concentrated liquidity.
Yeah, I'm in it. I'm doing stuff with it. That's
Yeah. You mentioned it at one time too, and I looked more into it, right? And I read the documentation, and it's really, I really like how they set it up. Essentially, they keep your liquidity around price, and they keep the range or the ratio as close to 50-50 as they can. And then it seems like they rebalance it once a day. And not rebalance it, sorry. They rearrange the liquidity pool and use the existing liquidity to keep it 50-50. And then the remaining liquidity that needs to be rebalanced, they let the market rebalance it for them by setting up a single-sided liquidity pool that takes on the they call it the adopted range, where say if the original pool was from 3,200 ETH to 3,500 ETH, right, and the price was 3,200, or sorry, 3,300, price goes up to 3,400. Well, now you have more USDC. They're not going to take that USDC and rebalance. They're going to take that USDC, the remaining USDC, after they stake the new liquidity pool of 50-50, they're going to take that existing or the remaining USDC and keep it close to price and adopt that lower range to buy the dip. So it minimizes impermanent loss by a lot. And not only that, but you're consistently generating high yields on your main pool, right? And then you have like the auxiliary or secondary pool to sell off that USDC into ETH if the market dips, right? And the markets tend to oscillate, and you get that kind of market rebalance in a way. There's still some impermanent loss, but it's not unnecessary impermanent loss like, say, a lot of these automated liquidity managers that just rebalance your liquidity pool to whatever strategy they program, right? So I decided to jump in and try out I'll share my screen here, and I jumped on and tested out arbitrum and ethereum, because I saw that Merkle is paying out some reward, right? And here's kind of a sample of what the trading fees, the pool rewards, the Merkle rewards, it all totals up to 100%, 112%. And I just had arbitrum just kind of sitting. So I'm like, you know what? Let me test this thing out, right? And it's really cool. It shows you what the ratio was when you deposited. Here, the deposit, and then it shows what it is now, and then it shows your P&L, and then over here it shows
that's huge.
Your performance versus hodling.
Yeah.
So it's plus $24. If you guys can see that, I'll just kind of zoom in. But yeah, plus $24. So I'm like, okay, I'm outperforming a hodler. And right there at a glance, I can just see exactly what my performance is. And then and that's it, and then you could kind of see here how it keeps, you could see the range over time, how they rebalance it. And you can see it's very minor, right? Just to keep price in the middle. Then of course you get these big drops. And then what do? They rearrange it, and they keep, whatever is left in, I guess you would have more Ethereum down here, right? Or sorry, more Arbitrum. And then, they just kind of manage it in that way, right? It's kind of move the ranges a bit, move the ranges without rebalancing. And that's key, because in DeFi, liquidity is still fragmented. It's not as deep of a liquidity as, say, a centralized exchange, or even like the stock market, right? Where you have nice deep liquidity where you're not going to take on a ton of slippage or not much at all, right? But in DeFi, you will take on a lot of slippage, especially on altcoins. When you rebalance, easily could see on an altcoin 0.5% to 1% in slippage. And say, just for argument's sake, like you're rebalancing on 100K, that's like $500 to $1,000 per rebalance. If you're going to rebalance that amount, now you could just take it to like 10,000, right? That's $50 to $100 for a rebalance. It doesn't matter, right, on the amounts, because that's a percentage amount on your principal, on your liquidity pool. Now your liquidity pool has to work to overcome that slippage in order to become profitable. And that becomes a problem with frequent rebalances, like a lot of these automated liquidity managers do. Whereas Beefy, they don't sell anything, right? They don't rebalance it. They let the market rebalance it for you. And that's amazing, because it's all automated. I would like to do this manually, but I just don't have the time to do that, right? Once a day coming in and doing that, it'd be a pain in the ass, right? But you have it automated here. And I'm willing to give up only the impermanent loss that I need to in order to run a strategy like this, because Arbitrum was just sitting in my wallet. I'm like, you know what? I'll take some of this and farm it, and I'll see how it performs. I just staked this like a few days ago, so I'm gonna see how it does. I would like to see how it does on a nice rally, and see how it performs, and just take note of that.
That's not bad. Man, can you explain how they rearrange without rebalancing?
Yeah. So say you start out 50-50 in the liquidity pool.
Right.
Pull up that you start out 50-50, and as price goes down, right, you're gaining more Ethereum. And then say you're up 70% to 30% in the liquidity pool, 70% Ethereum to 30% USDC. Now they would readjust the range to center price, and then they would take the existing ratio of liquidity and rebalance it 50-50. So say they take the full 30% of USDC and then take like 30% of the ETH to create that 50-50 pool. Now you have the 40% Ethereum, and they would put it above price to let the market get take price into that range,
even
off that Ethereum into USDC. And then when it rebalances, it takes whatever USDC it can capture and rinse and repeat, right? Over and over. And there's no swapping needed to do that.
Wow.
So 2 liquidity pools running. One is just a single-sided liquidity pool that stays as close to price as possible with that adopted range from the previous LP, and then just lets it run. The one thing that I want to see is like when it goes, like say you get a market trend, market spikes or runs in one direction. I want to see what they do when you're starting to get like nearly or all single-sided, right? Because you can see this range, what is it right now? 57 cents to 81 cents on Arbitrum. What if we move straight up above 81 cents? What does Beefy do? And that's what I want to see.
Yeah, I'm interested to see how that performs too.
I think they have a thing I don't know how it'll work per se, but they have like the calm period, I think. And so I think that happened with layer zero at some point. They had a huge spike up, and they basically don't rebalance for a few hours during that time. Even though they rebalance once a day or a few times a day, I think they have a system set up where if they had a huge spike, they just let it sit for a minute just to figure out when the market balances down. And then you're going to take probably pretty big haircut then. But I have to double check because I was reading about that as well. Because I was curious about what happens when something moves fast, which happens all the time in crypto.
Yeah, interesting to see.
Yeah. I'm not in the arbitrum USDC pool, but I'm using them for ETH. I'm using them for layer zero. I'm using for I'm just trying out a lot of different pools and seeing how it goes with the claim. So yeah,
I might have to go there and test it out myself. I've just been sticking to Uniswap, but
same here, man. And that's primarily where I stick to because I've even tried on base Aerodrome. I went on Aerodrome because there's so much hype on there, and the liquidity is a lot bigger. The TVL is a lot bigger on, say, an Ethereum USDC pool, bigger than Uniswap. So I'm like, okay, what is the deal here? So I staked it for almost a month, and I staked 2 liquidity pools, same value, same range, and the Aerodrome actually ekes out a little bit more of a rewards for you. The only issue is that you don't have automation with say Aperture or Crystal or Reverts, right? And then also you have to the rewards are paid in Arrow, so you got to claim the Arrow and sell it, if you want to split it up.
I was going to say, did you ever do a position that was unstaked in Aerodrome? So you have the option to stake and get Aerodrome rewards, or you have the option to not stake and just get the trading fees. Did you do either that as well or no?
Yeah, I tested that out as well. Just it was only for less than a day because I saw that they take a fee. I think it's a 10% fee of the fees earned.
Supposedly, over the past month, it would have been better to be in fees than it would have been to receive Aerodrome. Even with that 10% rate they're taking. I was trying to find it again, but basically there's a couple protocols that didn't want to go through the process, or it takes longer to go through the process to make the staked Aerodrome position like automation tools. And so they've made automation tools or semi-automation tools for the unstaked version, and the APRs were I think they're better than Uniswap most of the time, but very similar to Uniswap in all regards. So even with a 10% rank, because they have more volume than Uniswap now.
Interesting. Yeah. Interesting. Are you talking about the 10% fee?
They take 10% of the fees earned. It goes to the Aerodrome holders.
But you said even though they did that, you still got paid out more than you would in staking the liquidity pool?
Yeah,
really?
You get more. Okay. You get more from staking, more from unstaked than staked over the past month. I don't know if it's more than.
How can we forecast that? in the future, right? It's more like just a guessing game.
Yeah, I guess the guessing. It's like if there's a lot of market volume, like if there's a lot of volume and most of it's going to come through airdrop now, you can unstake and you most, if it's like a crazy week, you're going to earn more in fees than you are airdrop, especially now with the price depreciation of airdrop, with the fact that that it has more trading volume now than Uniswap on base. If you pull out of the stakes position, you should usually on a crazy week going to make more money in fees.
Really?
So, yeah.
And
Yeah.
and it's more than Uniswap too?
Yeah. I'll ask the guys. It's the Arcadia guys were the ones who showed. I didn't believe them. They were the ones who showed me the data.
Yeah.
But I'll ask them if they have a shareable like file of the data just so you can see it. But yeah, they basically made a like, that's not automated. It's like a slipstream management tool.
Yeah.
And you can take leverage on it if you want to, and you can do unlevered, but you can set up various strategies on there. And they didn't have staked slipstream. I thought that was stupid at the time because like I thought you're gonna make more off of getting the airdrop rewards. And like, no, you make equal to or more depending on the market conditions. Right now, since they've gained all this volume from Uniswap, they're gonna make more on slipstream unstaked, even with the 10% fee. So
interesting. Yeah, because I always see them at the top of on our yield hunter tool, that we post or that we have.
yeah,
It usually shows it at the top, man. It shows Aerodrome up there with the Ethereum USDC. I'm like, okay, I'll take a look again. I might even stake on there.
Is the yield hunter tool, is that on staked? Is it looking at staked positions, or are they looking at the unstaked fees?
I'm starting to think, I don't know for sure, but I'm starting to think it's probably unstaked.
Okay.
Yeah. I'm thinking too.
Yeah, because I think I'm pretty sure ETH at a wide range is better on unstaked because it's like 40% or something. ETH USDC, and claim if you have like I don't know what the percentage is right off the top of my head, but I did like a $3,000 to $4,000 position for the concentrated, and I think it was earning like 40-ish to 45%. You unstake that, and it was like 60. Like it was much larger if you were doing that. So, anyways, you can take a look though.
Cool, man. Well, I think we gave people enough to kind of dive into, talk about some good stuff. Just holding our drinks into the ETF, walk into the party, and the music starts playing, man.
Yeah, just like anyone that's watching this, right, and wondering like what's the next move, what can they do to boost those yields? During times of low volatility, like right now, I like to track. I'm going to share my screen one more time. Looking at the Bitcoin volatility chart, we're trending near the lows of volatility, right? Volatility is low. There's not a lot of yield. And during times of high volatility, we tend to, or we're wanting to recapture or just replay those times, right? Like the old times of like a couple months ago when yields were blasting through the roof. Nowadays, yields are low, right? And a mistake a lot of people make is they start getting very narrow with their liquidity pools, getting very tight at the risk of taking on too much in permanent loss, right? I'm not saying it's not to not get narrow and tight, but there has to be a very small risk of invalidation, right? Like if your idea gets invalidated really quick, you need to have a plan to rebalance back into the original plan. Like say you were farming on Ethereum USDC, a wide pool, right? Like say, let's go on the daily here, like a wide pool, you're farming up here, but now you're starting to see price kind of trade sideways and you're tempted to get a little tight here. What's your invalidation, right? If your invalidation is up here at 3,500 Ethereum price, that's a lot of risk, to take on, right? So it's all about balancing out what is the risk I'm going to take before I do this, right? Before I get aggressive and try to mash the pedal. Whereas if we were hovering above, like around 3,400, your invalidation of 3,500 is a small risk to take a stab at generating higher yields, And the beauty about liquidity pools is that you don't have to sit out of the market to wait for those opportunities where risk is low for your invalidation, right? You can sit and wait in a very wide liquidity pool. Like me, like if you look at my Ethereum, like if you look at this liquidity pool here, let me just switch it to the ETH price. You can see how wide I am, 2,400 to 6,500. And this pool is not even a week old. It's a few days old, like several, maybe 5 days old. But I'm waiting for an opportunity to get aggressive, right, on Ethereum. Right now is not the time. And I feel like it feels kind of bear trappy in a way. And we've already had this long drawdown for, a couple weeks, few weeks. We had this huge volume, candle a few days, about a week ago. And I mean, yes, we could go lower or we could go higher. And my invalidation levels for me, for my strategy, is just too high right now. So I'll sit and wait in a very wide liquidity pool. That way, if price dumps, I could buy ETH at a slower pace on the way down and not too quickly. Because if you go very tight, you could buy it very quickly up here and then be out of range, or sell it slowly if we go up, right? And then find and wait for the opportunity to get aggressive. And that's the beauty of it. Like I'm sitting here and, it's just slowly trickling out that yield while I wait. And
that's the name of the game.
Yeah.
Yep.
Yeah, for sure.
Patience and having a plan.
This is a great video. If you guys get value, drop a like, drop a comment, subscribe, share with a friend. Let us know what strategies, what projects, what tactics, or whatever you want us to talk about in the next one. We appreciate y'all for watching, and we'll see y'all on the next video.